Okay, hello everyone. It's William DeBike here again for pipjunkies.com, doing part 4 on our video here of what is Forex. Now, video is a little bit of a follow-on to the last video. In the previous video, we spoke about the different currency pairs, the situations they're in. So we spoke about the majors, we spoke about the cross currencies, and we also spoke about the exotics. This video here is going to be a little bit of a follow-on to that, but we're also going to be including a few other bits of information. Now, we mentioned previously that a major pair is basically anything that has the US dollar in it, that's involved against another big currency. Now, the graph here, so today we're going to be talking about market size and also liquidity. But if we look at this graph here, this shows what we said fairly well, I think. So this is based on 2010. We can see here that the US dollar trading volume in 2010 was 84.9% of overall currency distribution in the FX market. You can see there we had the euro based on 39.1%, the Japanese yen based on 19%, the pound based on 12.9%. Now, this shows what we spoke about previously pretty well, I think. Now, we said the dollar is the major currency. We can see here quite easily from the chart why that's the case. We also mentioned that cross currencies typically, and I say some people disagree with this, but the majority of people will agree that the euro, the yen, and the pound are what people would consider cross currencies. Okay, some people will argue the Aussie, but we can see from this chart: euro 39.1%, yen 19%, and the pound 12.9%. So they're the three biggest after the dollar. So that's why we'd consider them cross currencies. Big economies, euro, yen, and the pound. We've all got on there. So that kind of follows up to what we were speaking about previously. Now, it's also worth taking in consideration the overall world reserves of the market, and it resembles this fairly well. Okay, so this is the distribution in the FX market as far as what traders are doing. Now, this is as far as the actual world reserves. You can see once again, the dollar triumphs on there by a huge amount. Okay, so we've got the dollar on 62%, the euro on 27%. Once again, this is based in 2010. Now, it should be hopefully be fairly obvious why the dollar is so popular. Why the dollar is so powerful. Not only is the US the biggest economy in the world, we've already mentioned, it's seen as being the reserve currency as well. You mentioned in previous videos that, gold, silver, oil, other commodities are all traded at, the value of them is decided against the dollar, regardless of what country you're from. So, not only that, the dollar as well is seen to have a fairly stable political system, which, not everyone would agree with, but compared to other countries, it is. They're the biggest military in the world. Just things like that. It all helps just bring confidence towards the dollar. The dollar is considered a safe haven currency, and the dollar is considered a currency that's going to be around for a long time, and people at least assume that it's going to be right up there. So, whether that's the case or not really doesn't matter. That is the fact. Okay, so the dollar's not only the biggest economy in the world, highest trading volume, as I say, completely dwarfs everything else. That's why we consider that one to be a major against everything else. Now, another thing I want to talk about is liquidity. Now, liquidity basically is the amount of buying and selling going on at a specific time. Okay, so the higher the liquidity, the more money that's being brought and sold at any given time. Now, liquidity in the forex market can change, depend on situations. I mean, political situations. For example, if there's any unease in particular countries, then trading volume can drop, liquidity can drop. But typically, the forex market's extremely liquid. We've already mentioned, $4 trillion being traded a day, over $4 trillion, in fact. So, the volume of the trade and the liquidity side of things is extremely high. Now, we've also mentioned as well with other companies that can make up a part of that. So, if you've got particular companies doing business over abroad, they're obviously getting involved in the Forex market as well. So they do have an impact on the currency. But typically, it's going to be speculators that are going to be influencing the liquidity, the price of the market, the volume in the market, volatility in the market as well. So over 90% of speculation of trading is speculation. Okay, over 90% of that. So, the liquidity is always pretty high, which is good. It allows people to be able to trade into the market at any particular time they want. Pretty much whenever you're going to trade, that you're going to be able to get in and out of the market whenever you like. You're not going to have any problems with that. It's also worth noting as well with the Forex market that unlike other financial markets, so say with the London Stock Exchange or the New York Stock Exchange, whatever stock exchange you want to talk about, the transactions are done through that exchange. Okay, it's an exchange. Whereas with the Forex market, it's classified as an over-the-counter market. Okay, there's no central bank. There's no particular place that is being done. It's been exchanged through, hundreds, if not thousands of banks, 24 hours a day. You can trade wherever you like. A lot of people refer to it as an interbank market, but the technical term is a over-the-counter market. And you can trade from anywhere you like. You guys can trade from home. You can trade from here. You can trade from there. And it's all done centrally. Okay, it's all done over the counter. You don't need anyone to act on your behalf. It's all done over the counter for yourself. So hopefully that gives a little bit of an insight. Once again, a lot of these topics we'll be going into in a lot of detail. Everything here is, sort of very basic introductory stuff to hopefully get everyone on the right track. So that pretty much covers it for this video. If anyone does have any questions, by all means, let us know. If not, keep an eye out for more. And yeah, have a good day. Thank you.